All right, what's up, guys? Welcome to the Weekly Technicals Live session for October 21st, 2018. And looking at the dollar index, in last week's Weekly Technicals, we mentioned how we could see dollar index continue pushing higher, and we're looking for the liquidity above here. So pretty much the whole week, we've seen a nice little bullish week on dollar index here, and ultimately we cleared out the 96 big figure that we were looking for. And then here on Friday, we've seen some rejection. So typically why I don't trade Fridays is because you will see some sort of a retracement. So you can have a bullish week like this, and then the last day of the week being Friday, you can see a retracement like this. Looking at dollar index, though, based off where they found support, this was a 50% level of an ICT bullish order block. I'm not 100% sure if I mentioned it in last week's Weekly Technicals, but just to show you guys what it is. On a weekly chart, I just took these two down candles and used the fib to measure 50%, and that came out to this gray dotted line here, which was 94.82. So I believe I did mention it last week. I'm just not 100% sure. And the low of the week ended up coming in at 94.79. So only off by about 3 pips or so for that, but nonetheless, you guys can see the significance of using those daily and weekly levels, as how much support they provide versus using something like maybe a 15-minute or an hourly level. So from the actual level itself, 94.80, we've seen dollar index end up pushing up about 120 or so pips, and where it went for is the liquidity above these relatively equal highs. So we just poked our head above the body of the candle here. We haven't actually cleared out the liquidity above the wicks, which comes in around 96.20. If you look on Friday, we actually posted a high of 96.09. So I do think we have a little bit more continuation on the upside for dollar index. Now, with that being said, I do think early on in the week, so maybe today, tomorrow, Sunday, Monday, we could see this market trade down a bit. And if you look, we have this candle here, which I believe was Monday's candle of last week, if I'm not mistaken. But regardless of what day it is, it's an ICT bullish order block. So this down move before we've seen these 3 bullish candles closing above it validates this down candle as an ICT bullish order block. So I'm expecting, or anticipating, I should say, a retracement down into this ICT bullish order block, which the high of the candle comes in at 95.37 and the open comes in at 95.35. So really the area or levels I'm going to be watching this market is going to be in between 95.40 and 95.35. So that's pretty much the high to the open of the ICT bullish order block. And I'm just marking out this level really quickly on my chart so I can have it on here. And I'm just going to make this blue. Okay, so that is the first level of support that we should come into contact with if this market does trade lower. Obviously, if it decides not to trade lower and we just continue, shooting up, then we'll have to, get on board any trades with another potential support level. But as of right now, where current price is, I believe we'll see a bit of a retracement down into the 95.40 to 95.35 level. Show me some support, so form higher highs and higher lows on the lower time frame, and then we'll be expecting a continued expansion to the upside and potentially go clear out the 96.20 liquidity. And if we can get some continuation above there, so if we can get some real strength, so say we come down here, we retest this level, we find support, and then we break above these highs with a big bullish candle, kind of like this, right? We have 2 bullish candles, whatever it may be, but it closes bullish above these highs. At that point, I would expect that we're going to continue for the 97 big figure, and we can look for another potential opportunity. So if we missed an opportunity to get on board here, or they just continue to run it higher without trading lower, we'll wait for them to trade back down into support. So if they close above here, any retest of this 96.20 to 96 big figure would become support at that time, because right now it's resistance. So old resistance becomes what? New support. So if the market gets above there and we can get some support here, we'll then look for 97 big figure. So either of these scenarios I think will be a pretty solid or both of them, pretty solid buying opportunities. So for example, if we trade down here, you can get a portion of your position on here. So if you take one standard lot, if that's your normal position size, you can add 0.50 here, and then once the market gets above here, you can remove, say 0.3. And then once the market trades back down and shows you that it's finding support, you can add that 0.3 back. So you'll have 0.2 on from here, and then you would have collapsed 0.3, locking in profit, and then on the retest you can add an additional 0.3 back, which is what you took off previously, and look for a further expansion. That way you're locking in profit, you're also able to add your position back, and you're risk-free on the first entry. So that's how I would recommend doing it if you do manage to get a position on for both tests of support. Now, as you guys know, I don't trade dollar index specifically, but I'll be looking for the inverse of this price pattern to basically repeat itself, or I guess duplicate itself. I guess maybe that'd be a better word. But basically, I'm just looking for the opposite of what I just showed here to happen in foreign currency. So euro dollar, GBP USD, Australian dollar, New Zealand dollar, all that stuff. So for this week, I will be looking for continuation to the upside on dollar index. Now, here's what's going to basically change my mind on that. If we manage to get really below the 50% of this level, which will come in at about 95.10, I'll be on the lookout for potential bearish moves. But really the main thing I'm going to be focused on is this 94.80 level, which is the low of last week. If we get below that, I'm going to anticipate first a run down into 95.40, which that in itself will be about 40 pips, but I'm going to see if we can get through this, which if that does happen, it'll cause some strength in foreign currency. But first things first, I want to see, can we find support at this ICT bullish order block? If so, I'm selling foreign currency. If we break through this, then obviously we have to move to a bearish stance on dollar index, and we can look for buys in foreign currency. So that's pretty much exactly how I'm going to be playing dollar index and foreign currency. But for the most part, I'm going to be looking for continuation on dollar index to the upside. So that's going to be it for dollar. Now let's go ahead and take a look at euro dollar. And basically with euro dollar, we have pretty much the inverse or exact opposite of what happened in dollar index. One thing that's an interesting note, though, that I want you guys to look at is look at the lows. So we came down on Friday and we formed a low. The low came in at 14.33, and then we have another low back here that came in at 14.32. So we stopped one pip above it, and then we started pushing higher. Now, a lot of people, a lot of retail traders are factoring in that they've got a double bottom here and this market should push higher. It can potentially push higher, but what I'm expecting first is a deeper run lower. So if they do push higher, I want to see them push lower first, and I want to see them take out these equal lows and trade back into this ICT bullish order block over here. So I don't know what level they're going to hit. I don't know if they're going to hit the high, which is 14.30. I don't know if they're going to hit the open, which is 14.10, or I don't know if they're going to hit the 50% level, which is 13.76. So I'm not sure which level they're going to hit, but based on which level can show us support. So which level can show us higher highs and higher lows on a lower time frame, for example, like 15-minute or 1 hour. Is it this level, is it this level, or is it this level? Whichever one that is, from there, I'm going to be anticipating a potential bullish rally. So I'm not just going to be buying it as it trades in here, because starting the week off, I'm bearish foreign currency. So I want to see euro dollar continue lower. Now, I'm not sure if it's going to find support at these levels or not. Technically, it should, but it doesn't have to. So I'm not sure whether or not it's going to find support there. The only way that I'll know is which level shows me higher highs and higher lows. When I get that, I'll know with more confidence which level they're using and if they're going to hold that as support or not, or they're going to break through it. So obviously I'll keep you guys updated in the Telegram group with what I do. But first things first, for euro dollar, I want to see if they can push lower into one of these levels of support, prove to me that it's finding support, and if dollar index finds some weakness, we could see a really sharp run to the upside on Eurodollar. Now, I'm not saying we're going to run from 14 big figure to 18 big figure. That's 400 pips. It could be done in a week, but I'm not saying that they're going to do that this week. That's, in my opinion, asking a bit much. But I would like to see them react off of the bullish order block, and if they can break above this high at 1620, that would be nice. Because if we can get that, we'd have a break in structure to the upside, look for a retest, and we can look for a higher high up here. At the moment, I don't have that though. The only thing I'm looking for is I want to see weakness on Eurodollar. So to start out for the week, we've already got an ICT bearish order block formed. We've come back up. We tried to retest it on Friday. We failed to do that. So they may want to push it up a bit, up to 1540 or so, find resistance, and then sell off from there. But I do not want to see this market start running higher and break above 1620. If that happens, I'm not going to be bearish. I'm going to be bullish at that point. Either bullish or neutral, meaning I'm not going to do anything. But I'm more likely to believe that they're going to take this lower to clear the liquidity below here before they're going to want to take it higher, if they do even want to push it higher. So just understand, like I said last week, we are in a longer term consolidation. So we still are in a consolidation, but we're at the lower portion of the consolidation at a daily ICT bullish order block. So it would make sense for them to find support here and start trading higher. We just need to see, are they going to want to take out these equal lows first before they start running higher if they do, or are they just going to sell off and disregard the order block altogether, and then maybe they come back up and retest, one of these levels here, or they continue breaking lower and they'll retest this low back at 1300 big figure after they break through it. So that would, just to give you guys an example, that would pretty much just look like this. Would break through here, and then we'd come back up, look for a retest of that level, and then look for a continuation lower. That's if we completely disregard all three of these levels in here. Okay, I don't suspect that they'll do that. I think they'll probably find support at one of the three levels. But again, I don't know for sure, whether or not that will happen. We just have to have the levels on our chart to see whether or not they find support there or not. So I would like to see it continue lower and make a new lower low. It's typically just difficult for the market to break through these higher time frame levels. But underlying the higher time frame bias on this, if you look at a monthly chart, you can tell that we are bearish, right? High, low, higher, lower high, lower low, lower high. Well, not a lower low, lower high, lower low, potential lower high. We'd be expecting a lower low, right? So that's looking at it, overall longer term trend. But when you really dial yourself in and you start looking on the weekly, daily, things like that, and you really analyze what's happened so far on the monthly, we could, this could be a break of structure. We retested it, made a higher high, come back down. We could just be clearing out the liquidity and looking for a further run higher. So that's why I'm a little bit, I don't want to say 50-50 because I'm not, but I'm more bearish Eurodollar, honestly, but that's why I have that daily order block there, and I'm really factoring it in because, on the bigger time frame, so on the monthly, on the weekly, there are potential signs of a potential bullish rally. So if that's the case, we have to be looking for potential support levels. So the closest one to that is here. So that's why I'm anticipating a potential bullish rally off of any of these levels in here. And that's why we could just continue up from where we're at now. We could just continue pushing higher. I don't think that'll happen because they left equal lows. Typically anytime they leave equal lows or equal highs, we look for a run below or above that, and then a reverse in the opposite direction. So if they clear the liquidity below here, that could be a turtle soup into a support level, and then look for higher prices. And then again, turtle soup, all that is just a run on sell stops below the market, or a run on buy stops above the market, and then a reversal in the opposite direction. So you would see them run below here everybody in retail would think, oh, it's made a lower low, it's going to continue lower. But you have to look left, understand that it's in a daily support level, and we could see potential bullishness from there. All right, so euro dollar overall, I am bearish and I want to see continued weakness. But once we get to one of these three levels, not sure which one again, but whenever we get there, I'm anticipating potential bullishness. If we start breaking through the 50% level on a daily basis, so we have a daily candle that closes below the 50% level at 1380, at that point we just have to anticipate lower prices and look for a run below the 13 big figure down here below this low. Alright, so that is euro dollar. And again, if we get above, so with this bearish order block, if they get above 1560, which is just a rough estimate of the 50% level, if they get above that, anticipate higher prices. And all of those of you those of you in the premium group, I'll be sure to update you and let you know if I do switch my bias or anything during the week. But as of right now, what I'm focused on is bullish dollar, weaker foreign currency. So let's move over to GBP USD. And excuse all the excessive noise in the background. I have a cat that's literally scratching a scratching post right in front of my desk. So I'm sure that you guys on here can probably hear that. And if you're listening to the recording, I will not be editing this, so you will also hear it. And I apologize in advance, but this is what you get. So GBP USD, again, just like euro dollar, we're still in a longer term consolidation. So, you know, there's nothing like super beautiful that's sticking out to me at the current state of the market, but we've been mentioning these equal highs above 1.33 big figure. So I still want to see them run above that. It's just where we're at now, I don't think we're going to get that. If anything, I think they're going to continue pushing lower. So let's just go ahead and kind of talk about what we seen last week. So initially the market opened and we dropped, we gapped actually about 30 to 40 pips. Actually, I'm sorry. No, it was about, on this particular chart, it was about over 50 pips that we gapped down for the week, the weekly open last week. So in the weekly technicals I was mentioning, or it was either in the weekly or the daily technicals that we did with the premium group, we closed below, or we closed back above the 50% level of this daily ICT bullish order block. Then we seen a nice little run up again, but we failed to make a higher high. So we made a high, a low, lower high, bam, lower low. Okay. This series of up candles, so these two up candles, are now validated as an ICT bearish order block. So now that the market closed below there, we came back up on Friday, retested that, and look at the body of the candle, how we closed below here. So personally, what I want to see for GBP USD is I want to see this market continue trading lower, and I want to see them break below this 50% level, which comes in at 29.85. Okay, so they'll break through this. They'll probably retest it on a lower time frame, but on a daily basis, I want to see this market get below this low, which comes in at 29.21. So we use 29.25. If we get below 29.25, expect further continuation lower for GBP USD for a run below 28 big figure, targeting this area here. So you see I got the X down here. We've got relatively equal lows. And look at the move that we've seen up from there. So if you map out this move, this market moved about 500 pips or so from here. Now, look at what we've done. Look at what we've done since then. We came down, came all the way back up, cleared the liquidity above here, but failed to make a higher high. This high is lower than this high. Then the market sells off. Market comes all the way back up, fails to make a new higher high, sells off, makes a lower low, right? And then Friday they retest daily resistance. So it would make sense for this market to continue lower. Longer term target, I'm looking for 1.28 big figure. Now, if we get back above last week's high, which comes in at, so same scenario as euro dollar, right? If we get below last week's low, then we got to switch our bias. If we get back above GBP USD's high, we got to switch our bias. So the high comes in at 32.36. So if this market gets back above 32.30, really, I'll round down a bit. If we get above 32.30, I'm going to be looking for 33 big figure. Okay, so I'm not going to put those levels on my charts or anything yet because we're not really close to it. We're about 200 pips away. And I just like to keep the levels that we're trading like closest to on my charts. And I'm actually going to delete this 50% level as well. I just want to talk about something really quickly with you guys. So we had the 50% level marked out of this daily ICT bullish order block. We traded into it on Monday, had a nice little push up, got through it. So we closed through it on Thursday. Notice what happened on Friday. Came all the way back up, retested that level, and rejected. Okay, so the high comes in at 31.03, and this blue line, which is the 50% level, comes in at 31.05. Okay, so we missed it by 2 pips. No big deal, though. I mean, that is still precision. You know, you can't be right to the pip every single time, but as long as you're taking profit 5 to 10 pips early before your level gets hit, or entering 5 to 10 pips early before your level gets hit, you should always get a position in the market, basically. So on a daily basis, you've seen this market come all the way back up, retest what? Old support, because the market came into it, acted as support, pushed up. Once the market got through it, old support now becomes resistance, and then look left. We also have 2 up candles, which forms an ICT bearish order block. So now we've got 2 things basically lining up at the same level. We've got a daily ICT bearish order block, and we've got an old support level, aka old 50% ICT bullish order block, broken through. Now we retest that level as resistance and look for price to trade lower. So before I take that level off really quickly, I'm going to just show you guys, because a lot of people don't talk about this, and I always mention that, you know, I only trade London and New York session, but you know, there's trades at any time of the day, really, and they don't always have to look like this, right? So you don't have to enter up here and then exit down here. Sometimes they're just like short little scalps. So as you can see, this market comes all the way up to our level, and just say, for example, that you sold it there, right? And then you waited, like you set a target. So let's say you sold it here, and we'll just like make this a blue line like that. And then let's say you exited at this ICT bullish order block. So once the market pushed up, you have these 2 down candles where you would anticipate a potential retracement into for the market to find support again. Okay, so that would be our target. So say you sold it as the market got up here, which would be your higher time frame 50% level. Okay, your retest of old support, now resistance. Sell it there, and then you take profit here. That would just be a short intraday scalp, but that in itself is 40 pips. And that occurred after New York session. So that occurred about 12 a.m. Eastern Standard Time. 12 p.m. Eastern Standard Time, so noon on Friday, or 9 a.m. Pacific Standard Time on Friday for me. So I just want to mention that because anytime I'm teaching, I'm talking about trading during London or New York. But if your level gets hit, you know, obviously this would have been a scalp, so you're not going to be looking for lower lows, or, you know, you're not going to be looking for a crazy amount of profit. But if you sold it here, you know that we've already traded into higher time frame resistance, also lining up with lower time frame resistance, and below us we've got a new support level formed. So they'll likely want to trade back down into that. As you can see, the market wicks, closes all the way back down here. Next 2 to 3 hours, we end up hitting the level. So that's a nice 40 pip trade or so. And I just want you guys to, you know, see and also understand that not every trade will look the same. So sometimes you'll have a trade that may only take 15 minutes and then you're in and out. And then sometimes you'll have a trade that may last from, you know, like this, from 4 a.m. all the way down to maybe 11 a.m. So you may have hours that you're within a trade, or it could be minutes. You know, everything varies, but the main thing that you have to focus on is making sure that you're always entering and exiting at higher time frame key levels. And anytime I say key higher time frame levels, all I'm talking about is daily, pretty much anything over a 1 hour. So if I say key higher time frame levels, I'm talking about H4 support and resistance levels. I'm talking about daily support and resistance levels. I'm talking about weekly support and resistance levels. I'm talking about monthly support and resistance levels. Don't ask me which one, because there isn't any specific one. All I do is the same thing that you see me do every week. I just go in and I mark out all of my daily, all of my weekly, all of my monthly, all of my hourly, all of my 4-hour, all of my 15-minute, all of it. I mark up every single support and resistance level on those charts that's closest to me in price action. Once I do that, then I basically know which levels I'm looking for. So that's it for GBP USD. Basically, I want to see the market trade lower and hold this resistance at this daily bearish order block and look for a run below the 29.20 level down here. If we can hold below there, then I'll be looking for the 27.95 to 28 big figure down here. So that will be GBP USD, and I'm going to pretty much go a little quicker through Euro GBP and the remainder of the currencies. If you have a specific question, then just reach out in the live in the chat and I'll answer it for you. But I'm going to go pretty quickly through these so we don't spend a ton of time, and these sessions aren't, an hour each week. So for Euro GBP, I mentioned last week I want to see the market trade back up into this 88.50 level. Still haven't done that yet, but that will be the next level of resistance. So if we trade up into this and we start finding some resistance, look for a continuation on a sell-off down below these equal lows around the 87 big figure. Obviously, if we get back above the 50% level of this up candle, which will be about 89.20 or so, really I would use this high. So if we come all the way back up, make a higher high, then I would be looking for a new high to form about above 91.20. Which should lead to further continuation to the upside. So only if we make a higher high, though. If we come back up and retest this level, I'm just expecting continued weakness, which should lend to weaker euro, stronger GBP. But at the moment, we're just in a consolidation overall, just like we've been. So euro and GBP both will be able to move in sync with the dollar index. So there's nothing there right now that I think this pair is going to control more one than the other. So I don't think euro is going to be, more bullish, or GBP is going to be more bullish or bearish than euro, right? I don't have that right now. I'm just looking at euro GBP to look at, technically where could they go. So if they hit this level, find resistance and sell off, and and dollar index is continuing to trade higher, I'll be looking for sells in euro dollar. Okay. But that's basically how I'm going to play this. The only two levels I'm looking for is these equal lows at 87 big figure, and then this retest of structure, which is at 88.50. And so for dollar yen, this one had a beautiful reaction off the level that we talked about last week. So 14.50, we know that was hit. We mentioned it last week. We came all the way down. And what I was talking about in last weekly technicals is we have this daily order block right below us. As soon as the market opens, we end up trading down on Monday right into the daily order block. So if we look, the daily order block comes in at 111.65. The low of this candle comes in at 111.62. So traded into the order block by 3 pips, and that was the low of the week, and we seen strength from there. So that in itself was about a 100 pip move. So if you guys are in the free Telegram group, I sent you, I said go refer back to USD JPY and look at what we mentioned, and this was exactly what we talked about, potentially having a bullish reaction off of the daily order block here, and it provided about 100 pips for you or so. So that was a nice setup. Now going forward, if we do get that strength in the dollar index, again, we don't typically see dollar yen respect what dollar index does too much like the other majors. But what I would like to see is, now that we've come all the way down into this daily order block, had a nice reaction off of it, confirming this as a daily order block now. We've also traded into that here. So you can see we traded into that here on Thursday. Friday we had a bullish reaction. And so really for this week, I'd like to see dollar yen continue trading higher. I don't personally think that we need to see much more downside on this pair unless they're just going to continue and overall shift the whole market. And what I mean by that is 114.50 is going to be could potentially be a longer term high, and we could look for new lower lows below like 110 and 109.80s and stuff like that. At the moment, I'm not seeing that, because if you look, we've come all the way down into this daily bullish order block, hit it, formed a new bullish order block, came down, hit that, and then we're starting to have a bullish, well, we had a bullish day on Friday, and then we'll see what we get today through Monday. But overall, I think we could see 14.50 as a like potential higher high. But first objective, if you do, potentially buy this pair, your stop loss would, number one, have to go below this low. So it would have to go below the low of 111.62. The reason for that is the market's come all the way down, hit a daily order block, formed a new daily order block. So this new daily order block should be the one that holds as support. If this trade is valid and this market is going to go higher, this low at 111.62 should not be broken, meaning we should see nothing but continued expansion to the upside. So 114.50 will be like my overall target, which is about 200 pips or so from where we're at. But first things first, I want to see if they can trade into 113.50, which is the low of this ICT bearish order block. Once they trade into that, if I start seeing some weakness, I'll go ahead and collapse the position. Regardless, I'm going to take at least 80% of my profit if I do take this trade. Of course, you guys in the premium group will know about it. I'll call it in the Telegram group. But if I do buy this market and I take this trade, I will close 80% of my position at the low of this candle, which is 113.50. The reason for that is it's a daily bearish order block, and if this market is going to find some resistance, this would be the level that we could see it start selling off from. So I don't want to leave my trade on full position, come back and get stopped out when I could collapse about 100 pips profit. So that's why I'm going to remove 80% profit once I get up to 113.50, and my stop loss will be moved to break even. So I'll take it from this low and I'll actually move it up either below this low or in profit. So it's going to depend on the context of the market at that point. But remember, if you do get this 113.50, you remove at least 80% of the trade. Okay? So that's a really, really big takeaway for this session. If you take this trade specifically on this pair, 113.50, you have got to remove a big portion of your trade. You're doing that to keep your account growing consistently, and also to mitigate as much risk as possible. So once you're up here, you're removing 80%, you've only got a small portion on, and you're able to lock your stop loss and profit, so you have no risk on the trade left. So that's what I'll be looking at for this pair specifically. Let me actually add these levels on my chart. And for dollar yen, like I mentioned last week, it's not something that I trade often. But based off the price action that we're seeing now, we could get some strength in this pair. And I don't think it'll be too difficult for it to hit 113.50, which is, again, about 100 pips from now. I don't think that'll be too hard of a level to achieve. So we'll see how it decides to react. I am watching this down candle here, which is an ICT breaker. And I would like to see them get through at least 50% of that, which will be about 112.80. And then I could look to buy it from 112.80 to like 113.50. So that's pretty much like what I'm looking at for this pair particularly. But I really want to be short euro dollar if we can get the continuation higher on dollar index. So I mean, just as normal, euro and GBP are going to be my primary focus, but I'm going to also try to make it a point to keep an eye on these other pairs as well, because I often tend to just look at my specific pairs and I don't really look at these other pairs unless it's like Sunday, for example, or the weekend when I'm like going over the charts and everything. So that's why I'm not really trading them too much. But for those of you that watch these sessions and things like that, if for example, if dollar yen was your pair, there will be moments when I'm taking more trades than you in euro dollar or GBP, for example, and vice versa. If you're only trading dollar yen, there will be a time when you're taking more trades than me, in dollar yen. So I'm at the point where I can look at a few different pairs, but I don't recommend that any of you guys try to look at multiple different pairs. I really would highly recommend that you stick to one pair and just focus on really mastering that pair, kind of like how I've been able to do with euro and GBP. Like, I don't want to say that I've fully mastered them because I haven't, but I have a pretty good read on those two pairs. And looking at something like dollar yen or dollar CAD, additional to those isn't really going to affect me too much. If I do feel that it's starting to affect me, I'll just stop. But that's mainly why I look at them only on the weekends now, is just to really give you guys my thoughts and my analysis on it, but I'm not specifically trading it. And the only reason for that is because I've basically found my pairs that I like, and those are the ones I stick to. So this will be one to watch, and we'll see what we get with that. And obviously, those of you in the premium group, I'll update you on what I decide to do with it. If we get below the 50% level down here at 111.44, which just say 111.50, if we get below that on a daily basis, I would be looking for lower lows to form on a daily basis. But as of right now, I want to see if we can gain some strength. We've got these bullish order blocks. Let's see if we can get up to at least 113.50. All right, so that's dollar yen. Australian dollar, looking at this one. So I'm going to be, completely honest. Australian dollar is one of probably the slowest moving pairs. So if you're looking to trade this pair, or you do trade this pair, I'm sure you've realized already that it does move rather slow compared to the other pairs. So I actually recommend Australian dollar is like one of the best pairs to start off with for beginning traders. So if you're looking to master a pair, or you haven't found a pair, and maybe you're looking for something that doesn't require you to stay up in the middle of the night, depending on where you're at in the world, this would be one of the better pairs to go with, because Australian dollar typically tends to move a lot more during Asia and New York session. So with that being said, you don't have as much, requirements to stay up through London and things like that, whereas I do trade in euro and British pound, because those are based out of London. Based out of Europe. So for Australian dollar, if you actually look at last week, it was here the 15th, the 16th, 17th, 18th, 19th. So they pretty much did nothing. I mean, if you look at the range of last week, from the lowest point to the highest point, the range was 70 pips for the whole week. So there's plenty of opportunities to trade within there where you can catch 10, 20, 30 pips. Just understand, if you do trade this pair, it's going to take longer time to hit your profit objectives. And I actually think that's a good thing for new traders, because it really teaches you that patience and the discipline that you need to be able to hold your trades a little bit longer and not really exit them so quickly. Because I know so many new traders that exit their trades too quickly because of the fact that, they don't know if it's going to continue or if it's going to reverse or whatever. And obviously those are real problems, and those are, things that you should definitely, work on. But when looking at pairs like Australian dollar, for example, you really have to be focused on, number one, the higher time frame levels. So when it hits the higher time frame level, you need to do whatever it is you're going to do, buy it or sell it. And once that happens, you really need to make sure that, you're understanding the whole context of the market. So not just focused on the daily, but also understanding what's going on the hourly, the 4-hour, etc. Once you have that, you'll be able to really judge and understand when is the best time for you to stay in or exit that trade. With pairs like Australian dollar, though, I would always recommend, if you are up 20 to 30 pips, even 15 to 30 pips, I would say, close out a portion of the trade, because this one you will notice that it goes into consolidations. Now they don't consolidate forever, but when they go into consolidations, it's very tight, small range consolidations like this. So looking at the market, you can see on a daily basis, we're overall bearish. I mean, we've got a pretty nice bearish trend going on here. We've now retested the low of this candle here. So it's an ICT bullish order block. We've got 4 up candles. Once we close below that, that validates this as a bearish order block. But we've also got this down candle, which is an ICT bearish breaker. So I'm expecting if we do get continuation to the upside on dollar index, we should see further weakness on Australian dollar. And since we've seen such a small tight range week last week, and we've also been able to hold this level, so you can see they hit it on Monday, they hit it on Tuesday, hit it on Wednesday, hit it on Thursday, they hit it every single day last week. Monday through Friday, they hit the same exact level, and they were not able to close above it. That's something really important to notice. Every candle for last week hit the level, but none were able to close above it. Okay? So as long as we remain below it like this, what am I going to be looking for? A new lower low to form below where? 0.7040. Because that's the nearest low on the daily basis. So if we get below here, that does what? That confirms our overall bearish market structure, right? Because we've got high, low, lower high, lower low, lower high, lower low, lower high. What comes after? Potential lower low, right? So I would like to see, can we get down here now on Australian dollar? Now, again, we did see, pretty much consolidation all last week. And if we can start to break lower, this is about 70 pips or so, but it should be relatively quick in terms of the time that it takes to get down there, because we are coming off of a key higher time frame level, okay? So be on the lookout for that for Australian dollar. And now let's talk about the bullish side of this. Because if we get back above this 50% level, so roughly 71.90 to 72 big figure, if we get back above that, which also, if you look, it is it's the 50% level of the weekly ICT bearish order block here. So all I did was took my fib from here to here, and then we got the 50% level, and it comes in at 71.90. So that level, if we get back above 71.90 to 72 big figure, at that point I'm going to have to anticipate potential higher prices, because we do have a lot of liquidity above the market that they haven't taken out yet. They've just been dropping it lower, taking the liquidity below the market each time. But, they're going to at some point want to make a move back up to take all the liquidity above the market. So typically it's when they reach a key higher time frame level. And if you look, on a monthly basis here, we're still within this old monthly order block, which is, basically what we've been consolidating around for a while now. So since September 2015, they've just been consolidating around this monthly order block. I'm not saying that they're gonna find support here and this is where they're gonna just start their bull run, but if they do gain some bullish traction, they're at a level, and they've been at the same level for like 3 years now. So to me, the unwillingness for it to stay above it is leading me to believe that they're going to want to continue lower, which would be all the way down below the 60s. Which, I mean, that in itself is, over 1,000 pips. So that's not anytime soon, but I'm just trying to keep you guys in line with, what's going on with the higher time frame. Make sure you look at these things, because if you don't, you're going to miss out on them. And when we understand that we're in a monthly order block, but we're unable to really, find some support there, there's a few things that you need to start factoring in. Are they going to want to run the liquidity and then make the move higher? you don't know if that's going to happen, or you don't know if they're just going to continue, running higher out the gate. So really, you have to stay in line with the higher time frame. So higher time frame, we're bearish. We see lower lows and lower highs. And I can't really switch to a bullish bias, even though we are in a monthly bullish order block. I can't switch to a bullish bias until I actually have some sort of a daily confirmation or something like that. And that daily confirmation would basically be if we can make a higher high on the daily. All the way above 73 big figure is a bit much, but even a higher high above here would show some level of support. So I'd be curious to see if we can get above the 7150 to 7160 level. But personally, to me, it kind of just looks like we're finding some resistance here, and we may just want to continue lower for the 7040 level, again, which is about 60 to 70 pips from where we're at now. So we'll see what we can get with that. That's Australian dollar. Let's look at NZD, and then we'll take a look at dollar CAD. And I know I said I wouldn't make this session an hour, but we're almost at an hour. It's hard for me to keep it under an hour when there's like so many pairs that I want to talk about and specifics of each one and all that. So eventually I'm going to try to make these sessions less than an hour. So I appreciate you guys for sticking it through and staying with me for an hour, but there's a lot that has to be said. So that's typically why these weekly sessions are longer. So looking at NZD USD now, again, same as Australian dollar, higher time frame. You can see we're bearish, high, low, lower high, lower low, lower high, lower low, etc. But the key thing here is we formed a low, daily bullish order block. You can see that we retested that on Monday, traded higher. This was now a new daily bullish order block formed. Market trades into that, and then we trade higher again. So these could be the early signs of a potential reversal in NZD USD. We are seeing some bullishness, higher highs, higher lows, within the retracement. So I don't want you guys to think that the bullish trend is starting, but no, this is very short term. This is just a very small move over the course of about a week. For me to be buying this market, so I'm not just buying it right now off of these order blocks. I need it to actually break some daily structure like this. So if we can get above this like daily high here, at that point we've got a daily break in structure, look for a retest, and then from there we could buy it and look for a continuation where? Boom, right here. Why here? Real quick in the chat, why would we target this area above here? What do we have here? What do I always talk about with these two things? What is this? Real quick, somebody answer me in the chat. So if anyone's still in here, make sure, leave it in the chat. I'm not going to mention it until anyone talks about it. But for NZD, we're going to be looking for the market to break above this daily high. If we get that, we got a break in structure. And then we'll be targeting this level up here, which is around the 68.57. We're going to say 68.55 because that's an even level. Not even number, but an even level, meaning 55, 00, all that. Exactly. A double top. So we're going to be targeting the double top on NZD USD. For what reason? Because there's liquidity that's resting above here. Anytime retail traders see two highs or equal highs or M formation, whatever you want to call it, they expect that to be true resistance and that the market will hold. Sometimes it can, but very rarely it will. So we're going to look for this market. If we can get above here, if we get above 67 big figure, we make a higher high, look for a retest. Once we get that retest, anticipate a potential bullish run up above these equal highs. That's going to be the next level of liquidity if we continue higher. So pretty much how I see weakness or logical sell scenarios for almost every foreign currency. This one here, I don't necessarily see it. I don't see a bearish scenario. So it looks strong to me, you know, just being completely honest. Looking out on a daily basis, like just kind of give you guys an idea like what I see here. So we've got this low. There were stops resting below that low. The market came all the way down below those stops, cleared them out. Once we cleared them out, we started to push higher, formed a daily bullish order block, retested it, traded higher. Formed a new daily bullish order block, retested it, traded higher. So I'd like to see if we get above here, then we got bullish market structure. We've got a daily break in market structure. We've got a run on sell stops. So the next thing we'll be looking for is a run on buy stops, which would be a run above the market. And then we would have to look left for our most logical level of liquidity, which would be this, the double tops, just like Michael said. Equal tops, double tops, stops, sell stops, M formation, whatever you want to call it. Look for relative to exactly equal highs in the market, and generally that's where they'll target for bullish scenarios, and relative to equal lows is what they'll target for bearish scenarios. All right, so while every other foreign currency I pretty much see bearish selling opportunities, I don't really see that yet for NZD/USD. So in order for me to get short, so I'm not doing anything with this market. I'm not buying or selling it at the moment. I'll buy it if we get above here, but I'm not selling it yet until we get what I'm about to talk about. For selling this market, I need to see it break below at least this down candle, these two down candles, right? Because then what will that confirm to me? If we can break below these two down candles, we've broken below daily support. This up candle would then become a bearish order block, and we can look for a retest of that. So we would have a resistance level. But if you look left, this small candle, I'm not using this as a bearish order block. It's too small. Technically, it is a bearish order block, but I don't want to use it because the body of the candle is so small. I'd much rather use bigger body candles such as this, or this as an order block. Okay, but these are bullish order blocks. At the moment, we're looking for reasons to justify any potential selling opportunities in foreign currency. Now with this pair, like I said, I don't see anything clear yet, so I'm not doing anything with it. I'm not doing anything until I get either a movement above here or a movement below here. At that point, I'll have much more clarity whether or not I want to buy it or do I want to sell it. So this is what basically a market looks like when, or at least what it looks like to me when I don't want to do anything. Okay, so while we would expect it to continue lower, right, it could very logically just make a 70.5 retracement and then start trading lower, right? So you see the 70.5 level. It could even just come up to the 79% level and then start selling off from there. We don't know which level. Because there's no confluence with another resistance level, such as potential daily order block, anything like that. Since I don't have anything to the left to work with, the only thing I have to work off of is if they trade lower and invalidate a bearish order block, or trade higher and break market structure. So that's how we got to play NZD/USD. So be careful if you're trading this one, but this could be one of the ones that we could see an explosive bullish move on if we do get above these highs in here. So keep that in mind. But at the current moment, there's nothing that I'm acting on with this particular pair. All right. So let me just make sure that these levels are still here. And the last pair that we're going to go over is dollar CAD. All right. Dollar CAD, it's been a little messy, honestly, like the other pairs. for this one, I do believe that they're going to want to continue pushing higher. We're within this daily order block here, so I actually got this marked out. It comes in at 3109. So I'd like to see them push through this. I don't want to see them, start to find resistance and start selling off. If that starts happening, then we got to, potentially look at dollar index and see, are we getting weakness? And there'll be more to talk about then. But in a perfect scenario with bullish dollar, we would just like to see dollar CAD continue trading higher. In terms of what levels to be a buyer at, in my opinion, I'm playing this one pretty much how I'm doing NZD USD. I need to see a break above the market first, because if you look at this, we're really just in a consolidation, and we've got high, low, lower high, lower low, lower high, lower low, right, down. And then going up, yeah, we're getting a little bit of bullishness, but overall, we're within, a higher time frame consolidation. So we've ran the liquidity below the market here. We've also got this triple bottom down here if they do come lower. But the fact that they've come down, ran the liquidity here, came all the way back up, made a retracement, started pushing higher, made a higher high, leads me to believe that they're going to want to take it higher. But in terms of me being a buyer myself, they have to show me a break in market structures first. So while some of you may think that we've already had the break in market structure because we formed a higher high, but we're still within this range. So we're still within the trading range from this high to this low. So I can't be a buyer yet. Once we get above that, then we've broken out. Then we're like, oh, okay, so they've done everything they needed to do inside of it. Let's anticipate a potential retracement into some level of support. We could buy it there, and then we'll look for higher prices. But I don't have that yet. At the moment, we could be bullish, we could be bearish. Overall, I'm leaning more towards the bullish side based on the fact that we're expecting stronger dollar, and the price action in the market is showing bullishness. But for a high probability trade, first I need to see them get above that high. So that will be how, I'm going to delete all this stuff because this is old. And I'm just going to turn this blue line gray now because we've obviously already hit the level. And this is something else that I learned from ICT. Anytime that he has a level that's been hit, so if it's a resistance or a support level that's been hit, he turns it gray. So, basically he knows like it's been used, right? The level has been used, and you shouldn't have to focus on it again. So I've done that. And if you look here on a daily basis, there really isn't much, like support levels to work off of. So we may have to go like to if you go to a 4 hour, you can see there's a few more levels that you could use as support. So we've got this series of up down candles, which is a confirmed ICT bullish order block here. And the high of this candle comes in at 3087. So again, you could just round that to 3090 and just make sure it's visible on the daily. Okay, cool. So that's like the next level of support. Let's see if we can find some support here and trade higher. Other than that, I mean, we do have this bullish order block down here at 2960. I don't really think they're going to want to pull it all the way back down here to find support and go higher, personally. But nonetheless, it's good to have these levels on your chart because, again, you don't know which level they're going to use. If you have it on your chart, you'll be able to see, on the lower time frame, are they using it as support or resistance? And then from there, you can obviously, take a trade or sit out. But for dollar CAD, I'm going to be expecting higher prices. My target will be this high at 32.25. If we can hold above that, then I'll be looking for the run above 33 big figure. And we've also got these relatively equal highs at 33.80 to 34 big figure. So those will be my targets on the upside. But again, first things first, I need to see some sort of break in market structure first. So when I get that, I will, basically be paying attention to this pair a little bit more. But right now it's one of the pairs that I'm not really looking at too much. It's kind of just something I'm looking at on the weekends, seeing what happened for the previous week and if there's anything I want to do for the following week. So at the current moment, there's nothing I want to do for this pair yet, but we could, if we get above here, that could definitely lead me to wanting to take something in this pair. So that is it for the technicals portion of this video, guys. Let me go ahead and stop the recording, and I'll answer any questions you have.